Hey guys, welcome back to the channel. Today I'm going to be talking about an upcoming cross on two very key moving averages where historically we've seen the bear market end following a cross of these moving averages. So we'll be looking at the 50 weekly moving average, that is the blue line on this chart, as well as the 100 weekly moving average, which is the green line. So if you guys enjoy the content, please do consider leaving a like and subscribing. Also check out our sponsors and partners over at ftx.us. It is a great exchange where you can buy, sell, and trade cryptocurrency. And if you sign up with my link in the description below, you can get a 5% discount on exchange fees. So with these moving averages, we're going to be looking at when the blue line, the 50 weekly average, is crossing below the green line, the 100 weekly average. And we've actually only seen two crosses where this has happened in Bitcoin's history. We can see this time back here in April of 2015, as well as this time right here in February of 2019. Now, what you'll notice is actually that these crosses have occurred relatively close to the bear market bottom, with a low from a price standpoint being in about a few months prior to this cross. So if we were to just take a measured move here, we can see the low was set in January of 2015. Again, that cross came in April of 2015. So it crossed about 12 weeks after the bottom was already in. And then if we take a measured move from this time, you can see that again, they crossed in February of 2019, but the bottom was in fact 10 weeks earlier in December of 2018. Now, it's important to understand that we do have a weekly cross coming up here in the next few weeks at its current trajectory. So these two moving averages are converging and they will be experiencing some cross coming up here in the next month. If we just extend out the current rate of change of both of these averages, you can see that the blue one is declining, whereas the green one is actually increasing, and they will be getting closer and closer and closer. And if again, we just extend out these current rate of changes of these moving averages, you can see that we could potentially have a cross coming up here in, say, the middle of September. Now, again, if we were to say take a measured move of when that cross is eventually going to happen and go back, you could see that, if the low is in place, that would correspond to 13 weeks prior to the cross, which is pretty consistent with this trend here. And the point isn't necessarily to say the bottom has to be in. You can see actually in 2015, we did have a pretty significant retest of that low back here in August, several months after the cross eventually occurred. But the point here is that it did correspond to a great opportunity to accumulate, and you were still within this general range where, again, you do have that bear market bottom zone where anywhere within this range is considered to be accumulation. So you can see a pretty consistent trend here. And again, if we are experiencing that cross, we could be at yet another accumulation range right here, say between 19 and 23K. Now, obviously, we haven't experienced the cross yet, but I just do want to focus on the inevitability of this upcoming cross. And let's just understand first what these moving averages are calculated by. So the 50 weekly average is taking the average closing price of the last 50 weeks and then averaging it together. The 100 week is the same thing, but for the past 100 weeks. And if we were to take a measured move of 50 weeks ago, we can see we were actually closing prices upwards in this $50,000 region. So no matter what, unless the closing price of the weekly candle is getting back above $50,000, this moving average will continuously move down. It's just because we're averaging closing prices much further down, so it will decline. But if we were to look at the 100 weekly average and go back 100 weeks ago, you can see we were closing prices around the $11,000 region. So this is going to move up unless the weekly comes back down below that region. So this is going to increase as long as we're not back below the $11,000 region on the weekly, and then this is going to decline as long as we're not back above $50,000 on the weekly. So I think it's pretty safe to assume that the slope of the blue moving average is negative as well as the green is going to be positive, unless something extreme were to happen, which I don't think is very likely, and given that we will have a cross coming up here in the next few weeks. It's sort of inevitable at this point, so eventually when we do have that cross, we could look to the fact that historically this has been very close to the bottoms. This is a great accumulation opportunity, and I see no reason as to why this time would be any different. And I think that in general, this region would be considered another accumulation zone for the bear market bottom, and again, a great opportunity for buying Bitcoin. So I hope you guys did enjoy the content and the analysis. Once again, check out our sponsors over in the link in the description below. As always, I hope you enjoyed, and I will see you in the next one.